Hey guys, how's it going? Wow, my light, there we go. Okay, so you're thinking about buying home for the first time. Here's what you need to know. Okay, there's a lot of things that you need to think about. Number one, talk to your real estate agent. If you don't have one, talk to me if you're in Phoenix. But here's the thing, um, it's not as complicated as it seems to buy a home. And a lot of people think, they need to have a ton of money to put down. They need to, obviously it's difficult right now because prices are high, rates are high. Inflation is hurting and hitting a lot of people. It's tough. It's a tough time to buy a home. However, um, there's a lot of upsides to being a homeowner. There's a lot of downsides as well. Um, the upsides are you are in control of the asset. You're in control of your financial future in a sense of, I kind of look at it as when you own a house, it's a bank account that you can live in because you're accruing value over time in general, right? So generally speaking, the property value is going to increase. The property will go up over time as opposed to renting. You're just paying that out every month. You don't own the asset. You have no equitable interest. So when you own a property, when you buy a property, now you have equitable title to the property. You can sell it in the future. You can pay down the mortgage. It can potentially appreciate. You can rent it and turn it into an asset. There's a lot of things that you can do when you own a property. So, and if you're starting out, you don't have a huge budget, you can always look at a condo or a townhome. General rule of thumb, if you're buying a condo, just don't buy anything with a neighbor above you. My preference. Some people don't like the stairs, and that may be the only option, but in general, it's not a good idea to own something with somebody living above you, and here's why. There are things that go wrong, right? Plumbing issues, leaks, primarily with water, right? So the washing machine overflows or the dishwasher overflows, or there's a plumbing issue and water comes down, and that's going to cause property damage to your property. So the other thing is it's noisy to have somebody walking around above you. So generally try to avoid buying a property where somebody lives above you, unless it's a really well-maintained, well-prepared building. There's some exceptions to the rule, but in general, that's my personal rule of thumb. Now, owning property, the other thing you have to think about in Arizona, it's a big thing, and that's the HOAs. HOAs are a necessary evil. Now, if you're in a condo or a townhome, if you can avoid having an HOA, that is ideal. But there are some upsides. The HOA takes care of maintenance, the roof, the lawns. They're all different. You have to read the CCNRs to make sure what it covers. But sometimes they cover water and utilities and trash and other things like that. So it just varies from property to property. The nightmare of having an HOA is you have people that maybe mismanage the property, or they don't allocate the funds to doing the maintenance that you really want them to do. These are things that you have to think about. And then sometimes they can apply assessments and force you to pay them. They can, they can foreclose on you. If you rack up $1,200 or more in fees that are unpaid, the HOA can come in and take your property away. So there's a lot of downsides to having an HOA. A lot of people say, oh, they want a pool or a tennis court or good landscaping, and they don't want to have to maintain it themselves. Fine, but just consider that there are some downsides to having an HOA. Now, the home buying process is very, very easy to understand. Okay, there is a timeline. There's generally a timeline. The first thing that you have to do if you're looking to buy a house is talk to a lender. Typically, your real estate agent, whoever you're working with, is going to refer you to a good lender. They're not all created equally. Some of them perform better than others. There's a lot of things that you have to consider. You want a lender who's going to be on the ball, who's going to be handling and taking care of everything that comes up, and is going to be communicative and responsive, because if you don't have that, they can screw up your whole deal. So the first step is you talk to a lender, you give them some basic financial information. They're going to tell you, this is what you're approved for. Okay, this is how much you're approved for. This is the payment you can afford. Generally speaking, this is what you can go shopping for. They're going to give you a budget to shop for your house. Now, You send that to your real estate agent. Your real estate agent is going to go look at your listings that are on market that's available, and from there you're going to determine, what is possible, what's in your price range, and what are you ultimately looking for. Generally, the process of finding a property and pulling the trigger, that can be cumbersome for some people because they have a lot of demands and requirements. There's a lot of things that you want to consider when you're buying a property. Location is obviously important. There are some factors that you want to look at. I mean, corner lots, anything that backs to a major road or power lines, those are things that you have to think about, because you don't necessarily want those things directly in your backyard. That will reduce the value of the property. Now, today, it's kind of a premium. There's a lot of stuff available, and it's harder to find a really good property that is affordable because the prices have just continued to skyrocket. So these are things that you want to think about when you're looking at a property. Now, once you've found a good property that you want to make an offer on, depending on the market, last year you would make an offer and 10 other people were offering, and you have to come in highest and best and waive your inspections and do all these crazy things that nobody should really be doing. You should never waive an inspection on a property unless you really know what you're doing. But that's generally it. Now, in this market, it's more of a buyer's market. Submit your offer. The offer is going to be presented to the seller. The seller may accept your offer, or they may come back and counter. One thing that you want to do is try to ask for concessions. Ask for maybe the seller to pay for a home warranty, or find some other way to extract some value out of the deal as a buyer in a good buyer's market. In a seller's market, you can't really do that, but right now you can. So make sure you have a good real estate agent that's going to advocate for you. So you submit your offer, and let's say they come back and they counter and they want a little bit higher of a price. Maybe you tried to get us a lower price. At a certain point, you're either going to have a valid contract or not. And if you don't come to an agreement, you won't have a valid contract. Once you do have a valid contract, now you are in contract, and that property is under contract, and you have typically 5, 10, or 15 days of inspection period. Now, you'd be expected to put up your earnest money immediately within 24, 48 hours, depending on the agreement. You open escrow, the contract goes to a title company along with your earnest money, and they start doing their title work. And then what happens is you go through your inspection period. So you may have an inspector go out and have somebody look for termites and do other inspections around the property and give you a report on anything that's maybe adverse in the property, leaks, plumbing issues, and electrical issues and things like that. And they'll give you a report. And based on that, you can go back and ask for repairs. You can ask for, changes to the contract. You have 5 days from the end of your due diligence period. Once it's called a BINSR, a buyer inspection report, has been submitted. Once that's submitted to the other side, to the seller, then that report is analyzed by the seller, and they determine either they're going to accept your changes, or there'll be a little bit of negotiating if they want to provide a credit in lieu of repairs, or if they are willing to make repairs or are not willing to make repairs. And at that point, you're still kind of determining whether or not, okay, is this contract going to proceed? If the contract does not proceed, you have the right to cancel the contract. You can continue on looking for another property if you can't come to an agreement. And if it does proceed, at that point, your inspection period is over. And now, if you're using financing, your only contingency left is your financing contingency. At this point, you'll probably be waiting, providing more information to the lender. The lender is doing their underwriting, and at some point, you're going to order an appraisal. Then the appraiser is going to come, view the property, make sure that it makes sense, the contract price makes sense, do their independent evaluation of the property's value on behalf of the lender to make sure that it's a good, decent deal for them. And if the appraisal comes back lower than contract price, typically, it's another negotiation process with the seller. But in most cases, if there's no issue with the appraisal, the deal is able to go through. At that point, you're going to proceed towards the closing of that property. And one thing that you have to do is You may hear the word clue. You'll get a clue report. A clue report is an insurance report. Any insurance claims that have been made on the property, make sure you review that. And then, of course, you're going to have to shop for insurance at this time. You'll call your insurance agent, or whatever it is that you want to do to get your property insurance. You're going to have to order your property insurance as well before you close. And this is really the process. Typically takes about 30 days, sometimes longer, sometimes a little bit less, depending on the lender. But it's really quite a simple process. At that point, once you close, the title company will release it to record, which means that they're notifying the county that the change of ownership has taken place, the funds have been transferred, and the seller gets their proceeds. The lender funds the loan, and then you'll have typically 60 days before you have to make your first mortgage payment, and you get access to the property, typically on the day of or the day after closing. And at that point, you have bought your first property. It's really not a complicated process. And there's a lot of programs, especially with the state and things like that, for down payment assistance. If you make under a certain amount, you can be eligible for grant money. And then your typical options are going FHA. If you go FHA, you put 3.5% down of the purchase price. If you go conventional, you have 5, 10, or 20%. Of course, you can put more down, but most people are looking at what's the least they can put down, and those are your options. Typically 3, 3.5, 5, or 10% down. And then, of course, they're going to give you an estimate on what your payment's going to be and everything like that. So that's a general overview of the buying process as a first-time home buyer. And remember, use your professionals. So utilize your real estate professionals, ask them questions, and don't be afraid to buy your first home. Don't be afraid to take action. And just consider that it is a good long-term investment. I know some people would say your home is not an asset, but to a degree it is an asset. You're paying yourself over time through leveraged capital, the bank's money. And you can house hack, you can rent rooms out, whatever you got to do. But think about that. Now you have control of the asset, as opposed to if you're leasing, you have temporary control of the asset, but you have a lot of limitations as to what you can do with the property. So home ownership is great. It's a great way to be in control of your life. It's a great way to leverage your credit. And the other thing to consider is if you don't have great credit, there are ways to repair and improve your credit. Typically, a lender is going to have resources for you for that. So if you guys have any other questions, leave a comment, reach out to me, and happy house hunting.